that said, Irina, please introduce yourself.
Sure. Yeah, good morning, everyone. Thank you, Gary, for having me. As you mentioned, do a lot of mentoring startups. I probably end up speaking to 100 startups a year, if not more. And I also help investors and accelerators evaluate AI startups. And I've definitely also mentored a lot of individuals on different career paths. So happy to take the full range of questions, and happy to share resources. Let's see. Okay, so I think there's a question, so from Cameron. Starting two businesses at the same time. One is on the AI side, and I have no idea if there's product market fit. And I recently had a conversation with a friend that took some of the wind out of my sails. I'm basically just wondering if I should continue with my idea or fail fast and pivot. That is a great question. Lots of different questions there, right? It's the fail fast and pivot. I mean, knowing nothing else, the more information you can take, the more that you can see where things are going. I mean, I think Gary and I we're big fans of doing really small tests to see if there's viability. Right? There's that could go one of three ways. Right? Is your friend an expert? Do you trust them with a background? Take it for what it is. Do you want to try to do a small test to see do things prove out? And there's also just different, I would say, grades of success, right? The goal for venture scalable startup is being able to generate billions and billions of dollars to get back your investors money. But there's also nothing wrong with having a lifestyle business. So if it's something that supports your family, why not, right? So can take all of those things. Let's see, do we have any other questions? And obviously happy to, I mean, I'd like to do round robin. I think take one questions from everyone before we go to second round of questions, but happy to keep digging. Um, so yeah, so then the follow-up questions from Cameron: has lots of experience in tech. Small test do you suggest? A lot of people think my app is incredible. Difference between thinking is great and actually paying. Yes, definitely agree. So the small test would be, one is always the conversion from free to paid to, they said it's incredible. Are they signing up? Why not? Digging into what's going on there will be those small tests of um, because that's usually a question of, um, people say, okay, this is great. And then, will they start paying? And if not, that's an indicator of, a couple different things. One, the price might be too high. One is the price driven by value? What are they getting out of it? When does the price come in? And all of those things. Yeah. And I don't know if anyone else has any follow-up questions. And obviously, Gary, I don't know if you wanted to jump in on any of that.
Yeah, I mean, I always hate the fail fast idea, the concept of that. We talk about this time. Instead of trying to fail fast, reframe what you're doing as a series of science experiments. You have assumptions, you have hypothesis, these, and your kind of job is to figure out how to test for those as quickly as possible and figure out if you're correct or incorrect and have enough data. You're, get into the data side of this because you are data master, but have enough data to reflect on and analyze so you can learn from that and move forward in a way that if it's working, you can replicate that and optimize those systems, or you can identify what is going wrong and what needs to be addressed, like you were saying, right? Like if it could be the pricing, it could be how you're marketing it in terms of the way you're speaking to the benefits and the enjoyable experience and the value there. Or it could be you're targeting the wrong people. They just don't really care about it as much as someone else does. And you got to figure out what factors are at play, which are impacting your lack of success or contributing to your success. So yeah, there's a lot there. But yeah, everything we talk about with these as well is if you're very early on, before you start building anything, is to, yeah, run a fake door test and see if you can present your product or service to people as if it exists and see if they're willing to try to pay for it. Um, if you already have something in the market, like you're saying that your Cameron, you have no idea if there's product market fit. So, product market fit, a lot of people don't understand what this is, and Irina, we talk about this a lot too. There's problem solution fit, which is just the concept of you've identified a problem that exists for people in a specific market, and you've come up with a solution. You think you've come up with a solution, but that theory of your solution feels like it's a great fit for it. It's gonna provide them with the answer, the solution they need. But is that real? Are you able to do that? And that's what product market fit is. It's bringing the product or the service to the market and giving it to these people, knowing that they're willing to pay for it, knowing that they're willing to use it continuously. And over time, product market fit is the pinnacle of product validation. It's where you have so many people loving it and using it all the time that your company is completely viable and you have those same users and customers acting as your word of mouth marketing team because they love it and they're telling other people about it. And that takes a lot of time to achieve. And you need to have the data to back that up. And Irene, if you want to get into some of that, like how to assess for that and look for that, that'd be pretty awesome for everyone to learn about.
Yeah, for the product market fit, yeah, definitely. And I'll share a resource in the chat also. So I definitely have given multiple talks on that. So no, I appreciate that. Let me put that in the chat and then we can talk through it. Just a quick because there's slides and there's recordings, so then people can come back. I'm gonna put this in the chat. So the basic idea is what you're looking for. The short answer is, back to the data question, you're looking to see who's sticking around time after time. And who's actually willing to pay. So there's, to our earlier points about pricing and the right customers, you might have started out with one focus area and then maybe you pivoted to something else and you found, or maybe you're on your third or fifth pivot and then finally found paying customers, and those are actually sticking around time after time. And that, in short, there's a couple of other parts of it, but that's a key part of, you're making more money than it costs, they're sticking around. And then you've probably heard that metric that, if the product goes away, people are disappointed. Although, you can ask 1,000 people to take your survey, 10 take the survey and 4 disappointed. Like, did your product actually work? Or who's actually staying engaged? So that would be the short, and obviously happy to dig into that as well. And then John asks, curious what field your PhD in. Can you talk about what you study, what your dissertation was? And Yeah, sure. I mean, the short answer is my degrees in statistics. So back before it was data science, back before AI. And so what I ended up doing was I invented computer vision or image compression algorithm to look at satellite data. And I actually found that two storms on Jupiter were very similar. And then many years later, NASA's Juno mission actually did a flyby by Jupiter and actually found similar results. So that was pretty cool. But then I was in the industry, so that tidbit is a fun fact that's on my website and not actually in any publications. Um, so let's see. And then, so hopefully that helps. Melly asks, my company just had our first safe 2 weeks ago. We're doing an AI startup, but what do we need to do now in order to line ourselves up to get to the next safe? We're still in pre-seed and our first safe was very small came with access to an accelerator. What do we need to prove to investors besides more users? I know that the number one I know that is number one, but what else do they actually need? At this point, I'm starting to think our pitch deck is useless. Having a VC tear it apart. We're literally on our current product and aiming to get out the second version, which is more aligned with people right now. So there's almost like 3 different questions about safe. uh, safe pitch decks, what you're trying to do. So I'm going to drop another talk. I'm actually giving this tomorrow, but there's all, I have previous versions on diligence and what to look for. Wait, let me put this in the chat. Um, so I want to take a step back and just say, what is the goal of investment? Or of investors. So the goal of investors is to make money for very wealthy individuals that are using that money instead of investing in the stock market, are investing in startups. And so they're looking to see returns that are higher in the stock market. And so that's number one. Number two, for and I show an example of like investor math. So we can try to make it as easy as possible, lots of simplifications, but let's say an investor has a $10 million fund. Let's say they invest all 10 million, just to make the math easy. They invest 1 million into each of the 10 startups, right? So each one gets a million. We all heard the statistics, 90% of startups fail. So at the end of, let's say, you know, however long, 10 years, 5 years, only one survives, right? They gave it a million, and at the end, let's say at the end of 10 years, your company is sold for $100 million. Like, that's more money than I'll ever see in my lifetime. Well, the investor owns 10 and I forgot to say, they give you $1 million to give you the 10% to make the math easier. So if you make $100 million, you exit 100 million, investor gets 10%, they get 10 million, which is a ton of money. But actually, at the end of 10 years, if all they got was 10 million, they broke even. But actually, they lost money after inflation and all of those things. So why do investors look for unicorns? Because if you're at $1 billion and they get 10%, you know, now they've returned the fund and they look great on paper. So investors look for, why they're tearing the pitch deck apart is, how do you get to that venture scale? So what they're looking for is actually milestones to that $1 billion plus exit, not users, but who's paying, what's repeatable, how is that scalable, what is your margin? If you lose $1 for every two that you spend, right, then you won't be there, at scale. You're gonna lose a lot of money. So the short answer is, one is, that's what they're looking for. I also agree that when you go through and you get feedback for pitch decks, you ask 100 people, you get 250 contradictory different things. Like, unfortunately. And the reason why that happens is, everyone comes in with their own expertise and their own biases. And unless the deck sets, almost like manages everyone expectations, and I highly recommend you going to demo days to hear what that looks like, because for many accelerators, the outcome of that accelerator is a pitch deck that you can talk to investors about. I highly recommend. I also mentor Techstars. I mentor Gary's Precelerator and many others. Techstars across the world, they record those demo days. You can see what is a deck that does not assume does not require the audience to have any knowledge, and how do you show expertise in 3 minutes or less. Highly recommend, but also just highly recommend going to different demo days and seeing, especially for accelerators in industries that you're not in, to see what is landing and what's not. Like, what can you follow along? Because then you're put in those shoes. You're kind of putting the investor's shoes, right? Like, if you had $1 million, would you invest in this pitch? Why not? What would you want to see? And of course, then at the age of AI, ask Claude, right? Like, this is my pitch deck. What's my mode? What's my defensibility? Can you tell me about the milestones, about the margin, all of those things? Can it? And if not, then you know what to do as well. Let's see. And then your last part was iterating on the current product, aiming to get a second version more aligned with the people. So yeah, I think the more that you can, back to the fail fast and test things. I know this wasn't exactly part of your question, but it's okay, are you getting that insight from the engagement, or is that more about conversations? Because at the end of the day, again, you want to get to the easier said than done, the paying customers, to then see what's actually resonating. I mean, it's the everyone uses this example of, Slack was a video game that used this chat inside. And then, did they have, because they had information of who was using it, how, then they figured out actually that was the most promising part. Um, and if it helps for those, for those that are, we were talking about marketing and all of those things. So I mentioned that I, due diligence for investors, you know, the way that um I don't actually do any marketing, for better or for worse. The way that investor finds out about me is I have to be judging alongside them. And then they see what questions I'm asking. And that seems to resonate more than anything else that I've been doing. So going back to our earlier conversations, it does all tie in of, who are the customers, who's willing, I can, the advice that you hear, right, is like, go where your customers are. And so I can go to demo day, meet investors and say, hey, I do diligence. They're like, yeah, okay. But until we have a shared experience judging, that doesn't trigger the aha moment more than anything else. So in short, that's what I would aim for you. And I don't know if Gary, if you wanted to add anything.
Yeah, there's a lot of interesting things that I think are insightful for everyone, especially talking about how VC firms work. The fact that, yeah, if they break even, raise a $10 million fund, get $10 million back, they're losing money. But one of the big things they're losing money on too is for the investors, because VCs, the funds, they have to find investors to put money into their fund. It's not usually like one super rich person putting all their money into the fund and running it themselves. It's usually a group of different, high net worth people who then bring together a lot of their friends or people they know or friends of friends to pool their money together, and they're managing that whole collection of money on behalf of all those other investors, and the fund takes a percentage as management fees to pay for the day-to-day work and labor that goes into running the fund. And that could be paying the top, managers, the top people that started the fund, but also a number of people who are doing the marketing for the fund, scouting for the fund, lawyers for the fund, and a number of other things, right? So they could end up losing hundreds of thousands of dollars by just breaking even too. So these are really important things to be aware of and how, like, the mechanics of these things work. And then in regards to the pitch deck, like, Melly, we're over on Discord too, where we do the pitch workshops, just like on Start Motto where we're hosting this. And it's important to be a part of that and practice and not only kind of watch how other people are presenting and what we're doing, going through like landing pages as well, which are a pitch. It's a just a different form of a pitch deck. Instead of slides, it's a running continuous, line of images and storytelling, right? So all these things are super important to expose yourself to, like Irina's saying. But the biggest thing to be aware of is you're telling a persuasive story, and you need to understand who that persuasive story is for. The pitch for investors, it's like Irina said, it's going to vary based on what their own biases are, their background, experience, their interests, their field of interest, their whatever. And the more you understand that, the more you can cater that pitch to the individual you're pitching to or the group. If it's a shared group like a VC, they usually have an investment thesis and they're looking for specific things. Take the time to find that investment thesis or ask them about it and learn before you pitch what specifically matters to you the most. What do you invest in? Why do you invest in that? And also do some extra due diligence on your part, learning about the investor or the investor investment group to understand what they're bringing to the table for you, because it shouldn't be only money. And Irina, we can talk about this more. You can share on this more, but there's dumb money investors, There's neutral money investors and there's smart money investors. Neutral money investors, they just give you money and they're out of the picture and that's it. That's fine, but it's not great. Then you've got dumb money investors who are a total detriment on your company and your existence, even if they give you lots of money, because they don't understand what they're doing, or they're predatory and they're getting in the way of your business and trying to control everything, or they're creating a lot of risk and liability that could come back on you and you could be in jail or heavily fined or something. Now, smart money investors is what you should be looking for, a great match for you, your team, and your ambitions. That could be the market, it could be the industry, it could be potential strategic partners that they have through their portfolio companies that they're already invested in, any number of things that they're going to help you get to where you want to go with less friction and a lot more opportunity to see that scalability in ways that would otherwise not come, or maybe just be like extremely difficult to figure out how to make that happen. Um, yeah, those are like the top things. And
Yeah.
yeah, like
No, this
yeah.
was great. Yeah, and I will say, to research the investment piece, go on their website. PitchBook will let you do that for free as well. So yeah, the more that you can understand what they're doing and when they invest, because I feel like a lot of startups, understandably, say, oh, you're an investor, you invest, but not everyone is doing at the stage you're at the industry you're at. Some are leading the round and some are following on. So they won't be able to, and usually you need at least one lead for your round. So understanding those terms of, who sets the terms, and then actually to the point about actually safes, your safes will have to be on the same terms if it's in the same round. And I highly encourage you to do the cap table math to just make sure you're not going to dilute yourself. So what that means is the more you give away to discount, the more equity you are giving up. And so making sure that you still own the majority of the company. And then also I put in the chat a different workshop and a recording I did, which was the reverse pitch workshop, which was basically because I see so many pitch decks. Instead of doing another talk on what goes in your pitch deck, I actually started with a deck that I see about 90% of the startups, that are the pitches tends to be very generic, which is just like, hey, we're solving a customer pain point, we're doing AI, we're raising $1 million, three-quarters will go towards marketing or sales. Like, I'm not even joking. And there's usually investors in the room, and I ask, is this actually what you see? And they've agreed. And I also take, before I even show this deck, I take prompts from the audience, and this is all recorded, and you also get to see the slides. It's all free on that link. And I say, okay, give me like two or three different vague customer pain points in different industries. And we see how that deck, one, applies to all of those, but also literally like builds no rapport. And then we go through three iterations in the span of an hour to see how can we improve each of those to stand out about be like in the 80th percentile. And then we didn't get to the last 30 minutes, but it's in the slides of like, how do you actually stand out to the point of the story? And my short answer after all of that is, if anyone else can it have the same information in your slides, then your slides are too generic. So what I mean by that is, um, if you're pitching tech, it's okay. Is there insight that you have that nobody else has? What is something you've learned? And so the more that you can include, um, in every slide, some nugget information that nobody else can, in a way that builds rapport. And again, easier said than done. um One example, maybe if it helps, and again, it's a little bit vague, but I'll encourage you to go through those slides, is I was mentoring one of the startups at an accelerator. And so she's evaluated probably hundreds of solutions in the space, and none of them were a match. And so she decided to actually retire from her very prominent business to go invent the thing. And so when I first saw the deck, it just said, hey, here's my competition, like there's some check marks, blah blah blah. And actually, after talking to her, I realized my advice to her was, put it out there. You've evaluated hundreds of products. The top three reasons they fail are X, Y, and Z. And you can have pictures of the competition. And then you can say, here's how we've solved those three things. So you have that continuity. Nobody else can have those slides. And then that becomes also part of the moat. So because back to Gary's point about the thesis, their thesis could be very, very niche. It could be like one of the funds that I'm a or the fund that I'm a venture partner with is, it's a B2B AI SaaS, usually cybersecurity. So anything outside of that is a no. So what that means is all the startups we see are B2B AI SaaS cyber. So what that means is they probably get over 1,000 startups in that space a year. And so the question is, which is the team that will get it to be a unicorn, right? To the $1 billion plus so they can return the fund. So the more that you could talk about what is that expertise in cyber, in launching the products, in scaling, in tech, the more that you can show versus tell, because the slide, and again, this is unfortunately because each fund receives so many, and some will receive 5,000 a year. It's the, how do you show that you know your space and you are competing with people that don't know what they're doing and just threw together, just said, I have this idea, generate the slides for me. Like, I'm not gonna, that is unfortunately the reality too. Is so the more that you can showcase your expertise, the more that will be the selling point. So hopefully that helps. And of course, if there's questions on any of that, yeah.
Yeah, no, I love that. And again, when we do these workshops every week, that's a common thing that I'm trying to instill in everyone is showing. Don't tell us what your product is. Don't tell us the solution that it's solving, or what problem it's solving for, but show us it in action. Like give us that, like, that ability to resonate with it from a human level, that ability to see ourselves using it and feeling it. That's where like using photographs of someone holding, a phone using the app like over their shoulder in a setting that fits where they'd be using it, right? Like someone, I don't know if they're in Discord right now, but yesterday during the workshop, they're starting this app for driving to help you find parking spots. And they have so much opportunity to humanize that experience of using their product by showing actual photographs in the car, seeing all this traffic and like, like obnoxious stuff going on in the city around them and being like, where do I park? Where do I park? And then having the app like step by step show how this functions and sell the product without saying anything. You don't have to say anything at all. Instead, the whole landing page was like novel after novel and abstract, like, little like, illustrations and stuff and out of context, like screen grabs. And it was just like, I don't know what to make of this. But the same thing goes for a pitch deck to investors. They're humans too. They live and breathe and experience all the same things humans experience. So the more you can show them a human experience to resonate with them, it's going to build more camaraderie between you and them and help you stand out. And also the way that you're showcasing how your app functions from this very lived experience, it's going to make them understand the problem and the solution you've created. But more than that, and I say this all the time, the enjoyment that you're providing people through your product experience and brand, the benefits of that, and the value that's being created as a result of those, right? And that's where they're going to get
Yeah.
real excited and see, oh, wait, wow, okay, I can see how this is going to outcompete all these other ones because it's more enjoyable, it's more beneficial, and thus it's creating more value.
Yes, I completely agree. And then if you can do it end to end, to say, because there's so many that'll say, back to your point about the parking, or we're curing cancer, or your favorite outcome. And then the pitch leaves that hanging. And I'm like, okay, so how do I find that parking spot? And is it in LA? Is it in New York? What, all of those things. So the more that you can close the loop and say, if this is what we're doing, I want to see you actually get there in your deck and how you're doing all of that. But yeah, no, completely agree with all of that. So,
Yeah, for those that are just joining, again, post your questions in the text chat. I will relay them to Irina so you can get answers, feedback, insights, advice. Feel free to share if you don't have like a distinct question, you know how to frame it. Just share what you're working on, what you're trying to accomplish, why, and what you're scared
yeah.
of, what challenges you have, anything like that. And yeah, Irina's here to help you. Irina again has amazing, career that she's built, but also has deep understanding of what it's like to be both a founder and an investor. So don't be shy about whatever you're working on. What's going on? Melly, yes. Melly says, cool, thank you for your advice. Wonderful. You have follow-ups, again, feel free. Anyone else, again, don't be shy. Lots of you are working on stuff, or you've got things that you want to work on. Knowing where to
Yeah.
start and what to do is like a big part of it. And that goes to like also, Irene, you can talk about this, the methodology. Investors are looking to understand what your methodology is. And when it comes down to making a choice between this deal that a founder's pitching them versus this other one over here, the methodology goes a long way. Knowing that you know what you're doing and you're not going to waste their money all on the gut of, your gut instincts on things. That's like not something fun I think investors look for. But yeah, and when it comes to that, when it comes to the due diligence side of that, how do you look for the methodology that founders are employing with their teams?
Yeah, definitely. I think the short answer, kind of as we touched end to end, I definitely want to, I ask about that of, okay, walk me through this. How do you do this end to end? How do you make the trade-offs? Because well, so there's different stages of diligence as I share in the presentation. There's kind of the pitch deck, pitch, maybe some follow-on not, especially from the lead investors, technical diligence, either in the not either, but legal, financial, sometimes on tech. If you're in the sciences, there might be a science one as well. But to kind of dig into, are you doing everything that you said you're doing? And so a lot of when I evaluate startups and when I talk to founders, I know that there's no right answer. There's a lot of trade-offs. There's never a perfect launch, perfect product. Everything is buggy. That's just the state of how things are. And so I understand that when I evaluate a startup. But what I look for is, how did you make the decisions that you did? And how are you deciding what's the top priority? And I literally there's a founder I'm mentoring at an accelerator, and we've been trying to schedule him. He's been wanting to meet for a few months now, and then just cancels at the last minute. And I literally had to send this email and just like, this is now going to be the fifth time you're about to reschedule this meeting. This is the last time I'm rescheduling, because literally priorities, focus, and you when you're rescheduling the last minute, I can't give that time to anyone else. I can't be like, Gary, I can host another extra half an hour because, well, the time is set. And so it's the way that you make the trade-offs, the way that you're giving the updates. I going back to, just kind of maybe like even high level of, there's all the investor newsletters. And so because I mentor startups, I'm on these mailing lists, and then the updates that I see are like, we're working on version 2.3.7. And like, I don't even know what the previous ones were. What am I supposed to know? Like, what are these milestones? I also forgot what you're doing because I get hundreds of these. So the more that you can make it digestible of like, this is what we're doing, this is what we're working on, this is what we accomplished, and this is where we're going. Or actually each investor might have their own thing that they're looking for, or if they invested, when they invest in you, they're looking for you to accomplish the milestones. So if you can say, okay, we're reaching towards that, this is what we're doing, remind them, so it's all scannable and I don't have to remember anything. That makes it super easy. If I can just do a quick like 15-30 second pass, and then there's an ask at the end if you need it, and make it easy. And by easy I mean what I see a lot, if they're like, "Oh, we haven't asked if you want to review a pitch deck or whatever, send us an email." But no, just have the link there so I can review it and just reply and give you feedback. Like, I don't want there to be extra friction. So that again makes a very, very, very easy, scannable. All they just think of it as, if you had a direct report and their update was like, "Oh, I didn't I won't hit the deadline today, and it's because I got bug number 123 that I'm working on." You're like, "Yeah, what?" Yes, do not create extra steps and very concise storytelling. Yes, 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 completely agree with that. Um, let's see. Um, yeah, and I know somebody had a question of like, "Hey, I have this app, give us feedback." So this is supposed to be very general office hours. We're not doing that's outside of scope. I think that won't be helpful for anyone else. But the more that, again, everything that we've talked about is, hey, like, if you said you're going to be delivering on X, like maybe your outcome is like time to find parking is usually 30 minutes, would get you down to two, like demonstrate that. But yeah.
It's
So
funny you said that because they have that on their app, and I was saying get rid of that because they're trying to like in my experience, like opinion, they're over engineering what the benefit is, but in a way that doesn't apply to every situation and every person. Like being like, oh, we save you 15 minutes trying to find a parking spot. It's like no one really cares if you're saving like 15 minutes on average because it's about that next trip. And if you only need, all you need to demonstrate is that we're going to make it easier for you to find the parking spot and eliminate that frustration. And that in someone's like, mind when they're thinking about that, it's like, oh, I get it. I don't need to like start to quantify like how much time is being saved and stuff. So it's interesting that you said that. But I'm curious, like when it comes to you, but you're like, also like an engineer and like very data like specific. So it's very funny to hear like, two different opinions about like this is what I love to see and this is what I like to see kind of thing. But I think that also speaks to what we were talking about earlier about like, the pitch decks and knowing what story to tell and taking the time to, really craft the story for everyone too. Um, but yeah, like when it comes to those types of data, what data do you find is more distracting or kind of derailing from the high level pitch that you're giving either to an investor or a customer versus the data that
mm,
is going to typically resonate more and really add to the story and build that trust or excitement?
yeah, no, that's a good question. And I will say, to your before we dig into that, so your point about, the time to outcome versus not. So again, this is just one opinion, one investor. Don't extrapolate out. And yes, agree. Everyone's going to have their own opinion. What I wanted to point out is, hopefully bridge both of our advice there, is, you know if you said it should, if you're reducing time, to demonstrate that. So I think we both agree. And so I think it's the how you demonstrate that. But when you are potential, I think what I would like to see, again, as a data person, and I'm a big fan of the appendix, is one, maybe what you do in, not just this parking app, but your healthcare, whatever, you can say, currently the state of the world is X. It takes 30 minutes to find parking. It takes 6 months to see your doctor. It takes um you use 10 different tools to schedule a meeting, something like that, and you show like, hey, these are all the 10 tools, these are all the steps right now I need to go look for parking, and I'm actually going to go look for parking later today, and I have a Google Doc of like parking locations in different areas of LA. So totally a pain point, that you can relate to when you see like, hey, my doctor is just not available, or my insurance doesn't cover, whatever. So this is the state of the world. And then I would still like that experience of, and with ours, this is how we tie into your current experience, but make it seamless. So then, as you're walking us through what that looks like, then we can also, oh, we can see from that experience, oh, you did cut this down to 2 months, wait time from 6 to 2 months. The parking, I can pull it up. I don't know. I don't know the app, but like, through that experience, we can see that is much more seamless, and then your prices tie into that value. Again, like if it takes you 10 tools to schedule a thing and that's 30 minutes and you're a busy physician, how does that translate into money? Is that $100 that you save them? And so if you charge them 25 per thing, that's a no-brainer. So that again ties into the storytelling, how you're demonstrating all of that. And then Gary, to your question of like what data you find distracting or derailing. So for me, I have, for better or for worse, high attention to detail. So whatever you present has to make sense. And what I mean by that, you could have one number, but different investors are going to have different things. Some might, again, depending on what stage you're at, how much funding, you can Google for these like metrics at Series A SaaS startup. Metrics for like traction for pre-seed, your industry type thing. And I actually have a whole I have a whole Substack on things that I look for that gets derailing, that I uh I'm going to put this in the chat as well, but this is such a good question. But let me give you also specifics, but also, so I'll give you from like so I think the short answer is the number has to be correct on the order of magnitude. What I mean by that is, what I've seen sometimes is like inconsistency in the story. I see this a lot in pre-seed where they're like, okay, our TAM is this huge, like billions of billions of billions. And then our customers are sticking around for 3 days. And it takes us like 3 months to find them. Something like that. You're like, oh my God, like you're gonna churn through the whole world in like months, right? So that number does not make sense based on what you pitched. It's kind of like the one, and again, order of magnitude, I kind of feel like it's, kind of how we did the simple math. Like I'm not going to check like, do you have zero point 0.3 after your thing? Like, I don't care. It's just more like, does it make sense what you pitched and how it's venture scalable? The other one that is maybe like very specific to me is, because I evaluate AI startups and I see a pitch and I have an idea of what you're doing, that also has to make sense. Like if you said you're using this algorithm, that's got to be appropriate. And so one example that, I can give two different examples, maybe a little in the weeds, maybe a little too technical. So one example I think that comes up a lot is you see these, healthcare startups that are like, we're going to detect breast cancer, we're going to detect heart condition, lungs, whatever, from images. That sounds amazing. You see an AUC of like, which they conflate with accuracy, that are like almost 100%. And actually have a blog post on, and it's called When High Accuracy is Not Very Accurate. I'm going to put that in the chat too. So you see these things, you're like, oh my God, the startup is doing amazing. But actually, what ends up happening is they have issues with their data, and their data is super biased. So by the time, the way that the US healthcare works, you can't just go and just get these images. You gotta go to your primary and things look a little interesting and they do some more testing, and then they send you for a follow-up, and then they might send you to a specialist, and the specialist might order it and the insurance might approve it or deny it, then you do an appeal, blah blah blah. So by the time you get those images, a simple model that says everyone that got that image has that heart condition is going to do about as well as your model, actually a little better, but probably about as well. You're going to miss some people, but you're going to do about as well. So you see these pitches and they're like, our accuracy is in the 90s, high 90s, and I'm like, oh my God, that is something fishy's going on. And I saw this actually, and then I had another blog post fairly recently, just because we're talking about numbers. And again, like I saw this is way too in the weeds, but basically somebody also in a healthcare startup was like, hey, we validated our stuff, here's our amazing plot, and that the plot looks, you have something going on in your process, like, and so my question was like, hey, what do you think of why it's fan shaped? They're like, no, it's great. I'm like, nope, no, it is not. Here's what to look for, like look into this. And so for me, those things are just like, so when I see things like, an AUC of 99 and anything over high 70s, honestly, but especially in the 90s, something fishy's going on. And I see some other stuff that are doing something you have no idea what's going on, then it's you don't have the right team. You just threw things in and they're like, this is auto magically working. Great, I can put this in my pitch deck. Again, easier said than done, but uh that to me just jumps out and kind of why I do diligence. To add more to the story, to coming back, is more around, okay, you said you do X, back it up. Back up. You said you have an amazing network. Great. What are your LOIs? What are your signups? What's your wait list? So the more that you can demonstrate, if you can talk about CAC, your customer acquisition costs, and your um the ratio to the how long it takes to get that back. Like, if you can say, hey, my customer acquisition right now costs $50, but each customer that we acquire, we make 100 within their like within the purchase, we get back our CAC. Great. Like, if they stick around for 2 months, you've doubled your revenue. That makes it much easier. So the more that you can back up anything that you're saying, and again, different investors like different things. Some are more numbers driven, some want the story, some want both. When in doubt, just put in the appendix, honestly. If it comes up, you're like, oh great, I have a slide. Like, you've thought about this. And this actually comes up with often enough. You won't get dinged for, I don't know, I will get back to you, and get back to them within 24 hours. You will get dinged for trying to fake your way through it, or taking a while to get back to them, because then it sounds like, oh, you've had all this rapport that you just built and you lost it because you're trying to make stuff up. Or I was diligencing a startup where the founder was non-technical, which is not a problem. It was a fairly technical problem that they were solving. They had a bunch of advisors, and then to the question about numbers, their retention was not great. And they didn't have updated retention numbers. And so the questions were like, okay, well, what has been your retention over the last 3 months? And they're like, okay, we'll let you know. One, like, how do you not know that? Two, it took them like 3 weeks to give us the number. And they're like, well, now it's already out of date again. And also, why is such a high visibility metric that everyone should know took that long? So again, it just becomes like a signal of like, okay, what else is going on in your company? Like, if you have a fairly technical product and you don't know your retention, which is a fairly simple calculation, that you could do like a couple, again, hand wave your way through, assume this, assume that, here's what we have, then it becomes an issue of like, what else is going on. But yeah, this is hopefully, happy to dig into any of that, but hopefully that helps. Yeah.
No, that was all amazing. I found it amazing. I hope everyone else did. But yeah, people, ask more questions. We got some more time left with Irina. So again, if you're unsure what question to ask, just share what you're trying to accomplish, what you're working on, where the challenges are, where your fears are, whatever that might be, and yeah, get you some help. In the meantime, uh, yeah, we've got a new incubator program, and our first company uh, is in the process of pitching, and they're pitching to potential customers. And one of the customers asked them a question, and they were caught off guard, and they made the mistake of trying to come up with an answer on the spot instead of just being honest and being like, "Oh, that's a great question. I don't have the answer for you right now, but I'm gonna look into it. I'll get back to you." And they came off looking like a fool, and it was not good. And they learned a really, really hard lesson from that experience. And I'm glad that you brought that up and shared that with everyone, because you are trying to build a healthy relationship with these people. Like you said, rapport. You want to build rapport with them. And being vulnerable isn't a weakness. It's not a problem. Not knowing something isn't a weakness, it's not a problem. It's all about demonstrating what your methodology is to overcome that problem, right? And that's an opportunity for you to demonstrate why you're worth putting money into your company, because you have a methodology that can be trusted. You're not flailing about and you're not doing things by your gut. You're taking the time to assess the context of what's going on and formulate a plan and then act on that plan in a way that ideally is showing a an ability to assess the risk involved and manage those risks and move forward in a way that is most productive for you, your team, your company, and the partners, investors included. So I find that beautiful that you shared that and brought that up. I'm also curious while we're waiting for some more people to post some questions. This came up to mind. So we're working together with another incubator, and one of the or there's two companies there in that cohort that were creating synthetic data, synthetic research data for marketing purposes, so people can, so their clients could assess if their marketing strategies would work for these types of people and such. I'm curious how you feel about synthetic data. For me, I find it kind of atrocious and and very very much creating a solution for a problem that doesn't exist by avoiding like doing the real work involved. So I'm curious of your take on this and if synthetic data can be useful in certain situations and what those might be.
Yeah. No, that's a really good question. So yeah, I agree with most of that sentiment, and I do have, let me put this I actually did end up writing a blog post on this because it was evaluating synthetic startups, and part of it is, so what I agree on is it's that to be able to, I have to know the answer to simulate it. And so if I don't know, I make assumptions to give you a simulation. And so then I'll have to know, okay, well, where do you think you're going to be resonating with your marketing to create this fake data for you? And so, so on that side, that's why I kind of don't like these synthetic data startups, because you got to know the answer, which is the whole point of like, well, we don't know. And I like how Gary brought it up without doing the real work, because the other part is, I would argue that if you have a startup, you're solving a problem that nobody else has. And so, almost like by definition, you would have different customers. Your customers should probably be marketed differently, and so then it might not work. But having said that, of course, there's no one right answer. And so the nuance with that is, well, maybe what you do is, and we do this with ChatGPT and Gemini and all of our favorite is, you can ask, if these were my customers, like where would they go? What are their pain points? And do a little bit of research to help guide you, to Gary's point, the hypothesis, to go there and test it out and then see, do I actually, is this who it is? What are they telling me? How do I learn from that and pivot? So maybe what you'll see is, oh, they're not exactly my customers, but they've mentioned this other thing and I should go in that direction. And I will say I just mentored a team through the NSF I-Core program. And so what that is designed is, for university spinouts. So if you're, a student or faculty or staff at a university, or actually I would say university student or staff, you've created IP by your research, and they're trying to figure out, is it a viable startup? And the whole point of the program is you got to do 100 customer interviews or perspective and map out the state of the world of like, who are all the decision makers and what does that workflow look like. And it's 7 weeks, super intensive. I'm completely not affiliated, but I highly encourage everyone to see, like, who is like, how do decisions get made, like, who is that? What is their pain point? And what you'll find is, probably you might have users, you might have customers, and you might have stakeholders. And so users might actually use the product, but think of it like, individual contributor or something like that, versus, your customers might be the one footing the bill. That might be, let's say, like The manager of a team versus, direct reports versus the executives of the hospital that actually will, decide, or maybe it's the CISO, the chief informatics officer, to say, okay, do we actually approve a new vendor to come on? So being able to understand and speak each of those languages will go a long way of, figuring out who will actually buy um the product. So the user versus customer versus the KOL is kind of the acronym there. And then let's see if that, yeah, hopefully that helps a little bit. But yeah, wanted to give you the nuance in that. Yeah, and then there's another question. So deciding between bootstrapping and raising funds, that is such a good question. um So the short answer, I'll give you the right, like the kind of the three different contradictory opinion. So the more you can bootstrap, the better you look for investors. Because if you're bootstrapping, then what you end up doing is spending money to de-risk certain things and to uncover, take the time to learn and pivot, so then you can have more data points to show investors. Having said that, I obviously completely understand, like, that's much easier said than done. And so with investors, it's, you want to show how this is a no brainer. And I put it in quotes because it's so much harder. So the more that you can show, like, this is what's going on, this is what I've developed, this is the traction, this is how it's amazing, and how every dollar you give us returns 100 as your story, that makes it a lot easier to say yes. So having said all of that, um, I will say in one of my, let me try to find that slide. So I think there's also a middle ground, or actually two other middle grounds between bootstrap and investing, and that's having paying clients, right? The more that you can say, like, hey, people are paying us. And then second best is grants. The more that you can have non-dilutive funding, especially in this day and age, I know it's a little harder, but the more that you can talk about, like, hey, we've kept all of our equity, and we have paying clients, and our monthly revenue is, let's say, $2,000, but it's from 5 clients, and they've stuck around for the last year. Like, that's already um an amazing proof point. And then the other acronym that you'll hear is like seed strapping. So you kind of you bootstrap until you get the seed funding to help you scale, and then that gets you all the way to an exit, because you don't actually need to make more, you've already figured things out. So again, easier said than done. And in the diligence deck that I shared, slide 19, I post resources for grants. And of course, this is a slide that the Starburst Accelerator put together. But yeah, highly recommend if you can do the paying clients, and then that becomes attraction. Easier said than done. But yeah, would highly recommend that.
It's amazing. I have a follow-up question
Sure.
related to what they asked. So they're saying that uh, they need to have funds to market it and get it into people's hands. Might sound amateur, but this is the best way I could put it. So, excuse me. In my current business model, I have yet to figure out solid revenue streams. So, in your experience, how do you suggest, or how do you, in your own projects, come up with revenue streams or ideas for generating revenue through your product or service? Like, how do you utilize data for that? How do you go about, you know, customer interviews to try to, like, hone in on that?
Mm-hmm. Yeah, no, that's a great question. Yeah, the short answer. So kind of different approaches, actually. Um, we'll cover like three, maybe three different ones. One, the easiest one is like copy what works, what others are doing. Um, to get started, at least. Hey, if you're doing, SaaS, like, let's say you're doing like AI SaaS. Okay, there's You pay for usage, you pay for volume, you pay for per seat, or some hybrid. Maybe you start there and see like who is actually converting. Because to your data point, to your question about the data is then it's the um okay, well, you've said this. Now let's track conversions and let's track the flows through through where each customer from they find out to they downloaded to used it, they got to the aha moment to, paying, upsell, all of those things. And I cover that diagram in the one that I shared on the product market fit. So the more that you can say, like, okay, we started here, this is who our paying customers are, this is how they got there, how do we reduce the friction to get them to stay, and then and upsell them. And so then that becomes the data for your customers. And then maybe what you'll find is actually everyone churned after a month or a week, and what ended up happening was some page was broken. Like if you didn't even know that, then like you won't even know. Like I'm literally I this earlier today I emailed what is it, like the LA transportation. Like I have a tap card and I tried using it on Friday. Well, I did use it on Friday. I wanted to add $5. And I got charged, but it didn't actually land on the card. I'm like, okay, this is before Olympics 2028. So they sent an email, I created a ticket and they sent an email that's like, if this happened, do this, if this happened, do this, if this is, I'm like, okay, great. And then like down below it says, if your money didn't go through, here's what happens. So I have two things. So one, if you know things didn't go through, like fix it, so that I don't need an email. But also no, like have an alert, something didn't go through, but also I appreciate that they had the steps. So I copy pasted, filled in my details, added the screenshot and emailed it to them. So, right, like then like what's going on. And so I actually have um another opinionated blog post that I call what did I call it? It was about customer service. Oh yeah, here we go. This was also fairly opinionated as always, to the point of, okay, I see all these startups that are like, we're going to fully automate customer service. But I would argue customer service is a moving target because you hopefully resolve the issues that people contact you about. And so if you never fix it, then they're always going to be asking you the same things. And then that's going to be useless. And so yeah, I think that would be, again, in like three different directions. And then of course the last one is, what are people willing to pay for? What are, if you can tie it to value, then you can say, right, like if I'm saving you $200 every time you do this, there was a startup that I heard pitch like a handful of weeks ago, and they help uh with claims. Like they help process claims that have been declined. So honestly, any money they make is already extra revenue. So if you can say maybe like, hey, and they were trying to figure out the revenue. And so myself and a couple other mentors were like, well, can you tie it to percent of stuff saved? Because then it's a no-brainer. Like if we save you if we generate $100, I'm sure they'll be willing to give you 30-50% of that. And you can play around with it to say, okay, well, how much is it worth it to them? Because not only that, you save them time, all of these things. And so again, tying it to those outcomes and value makes it a lot easier to also say yes.
Yeah, I think it's great, like starting points for sure to think about this in terms of like monetization and generating revenue streams. And yeah, I mean, the first thing you should all be doing is researching what exists already in the market, what your intended customers, users are familiar with, so you understand what their expectations are. Because if you're releasing a competitor in the space, they're you know, fundamental understanding of what this is rooted in their experiences that they've already had with your competitors, right? And so that's like the bare minimum expectations they're going to have for your product. And then understanding, in relation to that, what they're willing to pay for and what they're willing to do and what the competitors are doing to monetize. Now, there's a lot of creativity that you can find by doing that research and learning about what is unique about your product and service and brand and how you're doing things differently. That's where you can be like, oh, well, because we are doing, this new thing and it's providing a much more enjoyable experience to everyone, and they get access to that with this, like a better benefit or more benefits or easier access to these benefits, then we can charge for that too. Or throw it into a business model that, is done in a slightly different way. But it always starts with doing the research, learning about your intended customers' behaviors, current behaviors and past behaviors, and the context behind why they're doing what they do or what they did,
Hmm.
right? And don't skip these steps. These are like the most critical steps that you can have before you build anything, before you even like have a fake door test with a landing page that doesn't have a product that is in the market yet, but you're just trying to test these things. So figure that out first. A lot of people are going way too fast, skipping way too many steps. If you're unfamiliar, lean methodology, it's a wonderful process to move forward while taking on the least amount of risk and figure out a project management system that works for you. Like Scrum, anything agile is really great. Doing to done's one of my favorites from another mentor who has done a couple office hours with us. He's my neighbor. It's like a very streamlined, simplified version of Scrum, but it's also rooted in a lot of core best practices for mental health and just feeling good about yourself and celebrating, your accomplishments. It's really wonderful. Yeah, but all these things in together are what's going to lay the foundation for you to move forward in towards your ambitions, whatever those may be, and learn as much as you can from the actions you're taking. So you're not taking on risks, you're not skipping steps, you're not creating an obvious failure point for yourself. Because again, failure is bad. I hate failing fast. I hate that concept. It's not about failing. It's about learning and growing as much as you can. Yeah. We're
I
coming
couldn't
up
agree
on
more.
time.
Yeah. Do you mind dropping the simplified Scrum in the chat? But yeah, we're coming up on time. I don't know if there's one last question, but yeah, otherwise, I'll see you in a few months. Yeah, and yeah, do you mind
Yeah, yeah,
dropping
yeah.
obviously a Scrum people can Google, but then the other one, in case people haven't heard from. Oh, doing to done. Okay, great. Yeah.
Yes. That's that. No reviews on websites. You can do our workshop on
Yeah.
Mondays. But yeah, yeah. Let me double check LinkedIn and others. Think we're good to
Awesome.
go.
Great. Well,
Yeah.
thank you one for your questions and your time and looking forward to your questions next time. Have a good rest of your day and talk to you soon.
Yeah, thank you so
Bye.
much, Irina, for being an
No, my
awesome,
pleasure.
wonderful mentor. And
My
everyone's
pleasure.
got lots of homework reading through all your wonderful blog posts. I need to do that too because it's so invaluable. So thank you so much. And everyone, thanks for
My
tuning in
pleasure.
and asking some good questions and being brave. All right. We'll be back for another office hour at 12:30. Take care, everyone.
Awesome. Bye.